So there's a lot of factors to consider when it comes to making a property investment in Singapore. And today at AB Property, we are going to discuss with you the top 5 factors that you must consider before you make such property investment. Hi, this is Billy.
And I'm Adeline.
And we are from AB
Property.
So there's a lot of factors to consider when it comes to making a property investment in Singapore. And today at AB Property, we are going to discuss with you the top 5 factors that you must consider before you make such property investment.
Before the videos begin, please subscribe to our channel and remember to like and share our videos to your friends. Okay, let's start this topic today.
You might have heard this before. If a property's rental yield sufficiently exceeds the mortgage interest rate, then it is considered a good investment. Well, on the surface, this seems to make sense. After all, when you buy a property investment to collect rental income, don't you want to see how the rental yield measures up against your cost of capital, which we call it the mortgage interest rate? There is also a lot of basis to this comparison. However, there is the danger that some classify this comparison as being the only thing that matters when gauging whether a particular property would be a good investment or not. Actually, it is just one of the many factors to consider when it comes to property investing.
So today at AB Property, we will be sharing with you the 5 factors to consider when you are looking into buying a property as an investment. So factor number 1, you must look into the net, not gross rental yield. If you are an employee making $5,000 a month, do you see the full $5,000 going into your bank account at the end of each month? Well, the answer is no. You have to factor in your CPF contribution and the eventual net amount that goes into your bank will be much lower than the initial $5,000. So the same goes for rental income. The rental income that you collect do not entirely go into your account. You will need to factor in your mortgage interest costs and also other expenses before you derive at your net rental income. So in Singapore, property tax and the monthly maintenance are the 2 big ticket items to account for. So make sure you deduct those from your estimated gross rental to arrive at your net rental income. Only from there, then you can calculate your net rental yield and compare it into your mortgage interest rate. Calculating the net rental income is closer to a true apple-to-apple comparison, but it is still not the full picture, and here comes our second factor.
Factor number 2, rentability. Unlike rental yield, we cannot actually use simple number to calculate or measure rentability. Rentability in general is how easily you will be able to find a tenant for your property. That is something to ask yourself. If you bought a certain property, how long do you think it will take for you to find a tenant without having to ask for a below market price? So you see, in many examples, a property's rentability may be inversely proportionate to its rental yield. So, for example, a property could either have a high rentability and low rental yield, or a low rentability and high rental yields. An example of the first case could be a property in areas with high demand. Because the demand is high, so is its rentability will also be high. However, this also means that it will be expensive to buy a property in that area.
Agree.
And the higher the purchase price, the lower the rental yield. As for the second scenario, an example would be a very old property with very little tenure left. Such properties usually have lower purchase price. And since tenants are not concerned about the lease period, there is absolutely no direct effect on the rental income. However, many of such old properties may have negative qualities that comes along with it. such as being a rundown condition, which in turn makes it difficult to attract quality tenants. So, even though the rental yield remains high, but the rentability is low. Of course, as we said, this does not apply to all or even most of the properties, but it does apply to enough properties that we must caution you against falling into the trap of rentability.
So now comes to factor number 3, the interest rate changes. So as government globally look into revive the economy through massive injection of liquidity, global interest rates have been brought to all-time lows. So, however, that does not mean that your interest rate will continue to remain low and stay there for the long term. Once the interest rate rise, your nice rental yield that you are enjoying may suddenly make your investment look like a very bad one. Remember that when it comes to mortgage loan, floating interest rate can change every 3 or even 1 month. Well, you can only raise your rental at the end of each lease period. There's no guarantee that your tenant will agree to the increment. So even though the rental yield may look healthy today when compared to very low interest rate, you cannot assume that this positive investment will hold in the long run. Hence, the important thing that you should do is to set a buffer in terms of your affordability so that you can easily manage any future increment in interest rates.
Factor number 4, liquidity. Liquidity is how easily the asset can be converted into cash. For example, stocks can be considered fairly liquid as you can both buy and sell them easily on the same day. Now, that is not the case for property investment. Not that it is bad, but this is something that you must take note of. For example, if the interest rate rises and the return of investment on your property becomes negative, you will not be able to sell it immediately. Hence, if you want a quick sale, you will likely have to give a significant discount over the market price in order to attract a buyer for it. So, how can we factor this in? Well, just like rising interest rate, the safest approach is to give yourself a buffer to reduce the chances of your investment turning negative. And also, it is important to manage your cash flow properly so that you don't find yourself in a situation of having to liquidate your property to service other obligations.
So here comes factor 5, which is our last factor. Capital appreciation contributes to your investment return. On the more positive side of things, you have to know that the returns of your property investment have 2 components. Rental income is one and the other one is capital appreciation. So what is a capital appreciation? Capital appreciation refers to the increase of an investment value. So for example, when you purchase a property at 1 million today, few years down the road, you sold it at 1.3 million, your 300,000 will be your capital appreciation. Capital appreciation is something not immediately accessible and is more uncertain. But this doesn't mean you should disregard it altogether. What it means is that when searching for an investment property, you need to study into the property that you are buying and try to see if there's any chance for future potential capital appreciation. Property investment is a long-term game. Rental income may provide immediate cash flow, but in the long term, capital appreciation is what you can really add to your total returns.
Okay, here comes the ultimate question. What is right for your situation? All investment carry some form of risk, and property is no different. Furthermore, the level of risk also varies depending on the investor's personal financial situation. What might be risky for you might be a safe investment for another. So, it will be irresponsible of us to claim that there is only one method to determine whether a certain property is a good investment for you or not. There are too many variables to consider, and you will need to balance out the factors and find one that best suits your needs.
What What we can offer at AB Property for you is to provide you with personalized real estate advice through our comprehensive experiences. If you are thinking of buying property and you would like to discuss further, do contact us at 8444-9706. We will definitely be glad to help you out. We have come to the end of our video and we hope you have benefited from it. Subscribe to our channel abpropertysg for more content. Do give us a like or share or even comment below if you have anything related to real estate to discuss. I'm Adeline.
And I am Billy.
And we are from AB Property. See you soon.
3, 2, 1, go. Hi, this is Billy.
And my Adeline. Sorry. Liquidity.
Liquidity.
你这个我推多啊，推多少？你关了我还没有人告，也没有用啊。